This is a demonstration of exercise M428 recording manufacturing cost in a just-in-time costing system. Gateway produces electronic calculators. Suppose Gateway's standard cost per calculator is $25 for direct materials and $58 for conversion costs. The following data apply to August activities. Direct materials purchased, which were on account, was $8,300. Conversion costs incurred were $20,500. They produced 300 calculators and they sold 295 at $105 each. In part 1 of the problem, it asked us to prepare journal entries for August using just-in-time costing, including the entry to adjust the conversion cost account. So the first entry that we would make would be to record the purchases of the direct materials. So we would debit raw and in-process inventory for $8,300 and credit accounts payable for the same amount because the problem said they were purchased on account. Next, we would debit our conversion cost for $20,500, and there would probably be a variety of credits, including wages payable and depreciation. So we'll just credit a variety for the $20,500. Next, we're going to record the completion of the items and the transfer to finished goods inventory. So first we're going to cost out the raw materials. So we said that they use standard costing of $25 for each item produced. So 300 times 25 is $7,500. Also, we need to credit the conversion cost for the items that were produced, and the standard cost for that is $58 per unit, so times 300 units produced would be $20,400. And then we would debit finished goods inventory for the total $27,900. Next, we're going to record the sale of 295 calculators at $105 each. So we would debit accounts receivable for $30,975 and we would credit sales revenue for the same amount. Next, we would record the cost of goods sold. So we sold 295 items and our total standard cost is 93. So that's equal to the 25 plus the 58. So we would debit cost of goods sold for $27,435 and we would credit finished goods inventory for the same amount. Next, we need to apply to cost of goods sold the unallocated conversion costs. So the problem said that we had $20,500 of conversion costs, but we've only applied $20,400 using the standard cost system. So to apply the remainder, we would debit cost of goods sold for $100 and credit conversion costs for the same amount. The next part of the problem, Part 2, states that the beginning balance of finished goods inventory was $1,300, and it asks us to use a T account to find the ending balance of finished goods inventory. Well, we know that we transferred to finished goods inventory $27,900 for the items that were completed, and then we credited finished goods inventory for the items that were sold for $27,435. So that gives us an ending balance of $1,765. And that is the conclusion of the demonstration for exercise M428.